Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 6, 2023. Happy New Year! Welcome to 2023. Hopefully this year would be much easier for investors and traders than last year. Please don't forget to hit the like button. As always, subscribe to this channel, share this video with others. Important thing is to hit the like button, because the more likes this video gets, the higher it is rated in YouTube and more people will see it, so it doesn't take a long time. Hit the like button. Stocks ended the week on quite a promising note. Dow Jones actually gave another buy signal. Overall, stocks seem to want to go higher. We'll talk about that in more detail. Junk debt also gained strongly for the week, and this is a very good sign for stocks. We'll give an example of a absolutely blockbuster trade for subscribers, Bed Bath & Beyond. It was a short trade, and then I'll exactly explain how it worked out, but it really worked out if you took the short trade. So again, congratulations, and stay tuned for the details. I think despite everything and all of the talk about raising of interest rates, etc., interest rates are actually gonna go down. So market has its mind of its own. So again, stay tuned for that. Gold approaches new uptrend. This is a momentous occasion. I think dollar has indeed tapped out, so we will describe that. If you are a subscriber, stay tuned. We have quite a bit of stocks to cover. Natural gas trade, I just closed it. It's a short trade. QQQ trade, lots of other stocks, Spain, Thailand, Walmart, Dropbox, Goldman Sachs, VMware, JD.com, etc. So stay tuned. Let's get right to it. I was told that I spent too much time getting to the point. Well, let's get right to the point. This is S&P 500. As you know, I use my proprietary indicators to trade. These are green, blue, red, and yellow lines. On this chart, you can have them on your chart. Simply follow the directions in the description of this video. On this chart of S&P 500, what we see now is not an easy chart. I think right now we are seeing a potential change of trend from a downtrend into an uptrend. So a downtrend began last year in 2022, where I'm hovering in April of last year. It changed from an uptrend. We were buying stocks back there in 2022, and then it changed into a downtrend. So it is always more difficult to sell stocks short than to buy them. Now, I think there is a very good chance that the stocks have indeed bottomed. There is the hammer candlestick from October 13th and of last year, 2022, and since then we're seeing more or less a move higher. So at least we're seeing higher highs, like for example here in October, higher lows. Here's November, higher high. Here's one in December, and then another higher low here in December 22nd of last year. Now, what we need to do is we need to get another higher high. And I think if we get a new higher high, we will be in a new uptrend, because notice this blue support resistance line, which is currently at 4275 for S&P 500. So this blue support resistance line is my way of describing bull market. So if a stock, or in this case S&P 500 futures, close above this level, we are going to be making higher highs and higher lows. And if we close above this blue line, 4275, most likely we will actually start making new record highs. So this is all despite the talk about various negative factors out there, and I am not denying that there are many negative factors out there. I think the biggest one of them is, of course, the war in Ukraine. However, some people say that it is the interest rates. Other people say there's a dysfunction in Washington. Yet other people say it's some other thing altogether. So I don't really worry too much about why things are happening. I am more interested in what to do about those things and how do we do it. And this is what the technical trading is all about. So looking at this chart so far, notice these downward facing arrows. These are all signals to sell short. And the previous signals to sell short were excellent back here in August and September of last year. But this time around, I repeatedly said that this could be a bear trap. So a bear trap happens when we have a short signal, as in, for example, we had multiple. You can see there's so many short signals. So a short signal occurs in this my system when a stock has a high above this red support resistance line. Previously, we have closed below this yellow line. Now we have a high above the red line and a close below it. And we can see multiple instances of this type of events happening. The latest one, of course, is right there on December 15th of last year. And I kept saying that this seems like a bear trap. And bear traps happen when we have a signal to sell short, but the movement to the downside is negligible. Now, this movement was not huge, but you could have made a little bit of money here. So it's about 3.5% from the signal to the low. However, you need to be super nimble. And actually right now we're back to the levels where the signal occurred. So unless you're like extremely nimble and quick, then it's quite difficult to make money with a 3.5% move. So this is another reason why I think we're seeing a potential change in trend. This is purely from my experience, and the system actually says sell, 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 but my experience is saying maybe this is a bear trap, and I have a strong suspicion that this is a bear trap indeed. So we're seeing this movement to the downside, which is negligible, and now today we had a big run over 2.25%, 2.26% run to the upside, and basically this entire downward movement was negated just today in one day. So let's see what happens Monday, but there is, we're coming up on this red support resistance line, which is currently at 3966. I'm reading it right off the chart. So this is, by the way, a trading view interface. You can have the same indicators on the trading view interface. Just sign up on my site. So right now we're approaching this red support resistance line, which is super close. It's like less than 1% away. And I think when or if we get to it, there is upside pressure for stocks. There is a good, feeling, I guess, that there is upside pressure for stocks. When we get to the junk debt, I will show you what happens when this type of events happen, when this price comes up to this red support resistance line, kind of stays around it for a little while, and then sometimes it just gaps above it. So this is what's happening to the junk debt. So looking at this chart, I am more and more coming to the opinion that this is indeed a bear trap. So latest signals to sell short are not to be taken, so to speak. Looking at Dow Jones, in fact, we're looking at yet another opportunity, but signal to buy. So signals to buy occur when a stock closes above the blue line or comes down towards the blue support resistance line and then closes above it again. So for example, you can see that initially there was a breakout here initially we closed above this blue support resistance line on November 11th. So Dow Jones clearly is leading this market higher. And then we came down towards it. We came up actually quite high right there on December 13th and came down below this line again. And today, yet again, we closed above it. So now we're seeing yet another signal to buy. So I am more optimistic about stocks right now, even more optimistic than I was back here in November. This is quite a good looking pattern, to tell you the truth. So, this is good to see that we have large cap stocks leading the stock market higher. Ideally, the entire market should be above this blue support resistance line. In that case, we can just say, okay, we're done with the bear market. Knock on wood, we're done with the war in Ukraine. And, sky is the limit. Right now, there's still a lot of problems. And, you can just open Wall Street Journal and or whatever, any of the newspapers, and read about them. But for our purposes, things seem to be improving, and this is a great sign that Dow Jones is now in a bull market uptrend. And if this continues, we can look at weekly chart, for example, of Dow Jones. We can see that new highs are not far away. This is a record high that occurred in January of last year, of 2022. We're not that far away. We're only 10% away from record highs. And record highs for stocks do not happen in the bear markets, in downtrends. Looking at NASDAQ is very, compared to other ones, is quite weak. Notice where NASDAQ is. NASDAQ is next to lows. Look at this. We're next to all-time, 52-week lows. Dow Jones broke out above the blue line and is approaching new records. So you can see that there's a huge division here, right? The technology is not leading right now. So could this change? Very much possible. So you're reading about layoffs in the tech sector right now. You can look at it from two perspectives. That yes, people are losing their jobs, but from purely bottom line perspective, layoffs are, companies are, how do you call it? They're strengthening their bottom lines, they're strengthening their profits, and investors are seeing, oh, look, companies are strengthening their profits. That means that stock prices will likely go up. So yes, NASDAQ is underperforming. That doesn't mean that it is going to, collapse from here. I think we can, because of the correlations between various stock sectors. So we can look actually at, okay, so you can see this is correlation coefficient to S&P 500, this in yellow down here. So this is Dow Jones. You can see we're basically same thing. NASDAQ, basically the same thing. We're doing the same thing. NASDAQ is doing the same thing as S&P 500. Performance-wise, so correlation and performance are two different things. Correlation meaning that S&P goes up, NASDAQ goes up. Performance means if S&P goes up by 1 point, will NASDAQ go up by 4 points. So in the past, NASDAQ outperformed S&P 500. Will it continue outperform? We don't know. Right now, it's clearly underperforming. So that again doesn't mean that it is going to continue lower from here. Usually, stocks are doing the same thing. It's very unusual when stocks don't do the same thing. So I'm relatively optimistic right now. And here's the Russell 2000 small caps index. Okay, so this one, they're also doing quite similar things. Notice the way this indicator is turned down, kind of towards the price action. So notice that here we have a couple of white lines. In fact, these are what's called projections or ghost feeds. And the funny thing is that I did these projections in November, and notice this lower projection. I mean, it just exactly fits what's happening in real life. There's the projection with the, yellow it's called a ghost feed. So I'm projecting a move higher, most likely pretty sharp move higher in the next few days to weeks. The January 17 date is important because we can project my indicators into the future, and notice that the indicators are coming down towards price action. The lowest point, turn off this, the lowest point is going to be January 17th. So we're looking at late January to, I guess, early February to see, is there going to be an important event? And in the past videos, I said this is a final argument of kings. So I kind of compared war in Ukraine and some sort of an important event that is going to happen in late January, and the stock market will react in some way. So I'm hoping that we'll see a very positive resolution, and we'll just skyrocket higher. An alternative scenario is also quite possible. So I'm hoping that this is not going to be a nuclear weapon going off somewhere in Europe. So we're watching super closely. January 7th is January 17th is literally 11 days away. I am fingers crossed that something positive will happen and some sort of a positive resolution will happen. Maybe things will just calm down finally and we'll move on with our lives. So looking at Russell 2000 again, because of the correlations, Russell 2000, we can look at Russell 2000 correlations. Russell 2000 sometimes does something different. Notice that occasionally S&P 500, this is a correlation coefficient down below here, occasionally S&P 500 is doing something different than the Russell 2000 small caps index. But right this instant, correlations are huge. 94%, 0.94 where I'm hovering. 94% of the time, Russell 2000 small caps index is doing exactly the same thing as S&P 500. Keep that in mind. So, okay, let's see what happens. Again, I'm more positive right now on stocks than just a couple of months ago, really. I am also more positive on stocks because of the way high yield bonds or junk debt is acting. So we're currently looking at JNK. This is high yield bonds. So this is what I wanted to show you. I think I mentioned this in the beginning of the presentation. So notice what happened here on January 4th. Then again on January 5th, we see price coming up towards this red support resistance line, and then today we gapped above it. Nice big gap. So this is kind of like a pent-up demand, I guess, or pent-up, I don't know, like a floodgates opened and we saw a gap up. So there was no trades here. So gap up usually, always indicates buying pressure, lots of buying pressure. People want to get in this stock, or in this case, high-yield bond, junk debt, because they think that prices will be even higher in the future. And they're willing to pay more money for this particular security. So high yield bonds, why do I give a hoot? This is another reason. High yield bonds, JNK, also have a huge correlation, huge positive correlation to S&P 500 or generally stocks. So notice again, high yield bonds most of the time, not always, but vast majority of the time are doing the same thing as stocks. Currently, high yield bonds or junk debt are doing exactly the same thing as stocks in 88% of the time where I'm hovering. It says 0.88. So it's good to see such behavior where high yield bonds are actually leading the stock market higher. There is a belief, I guess, that bond investors are smarter than stock investors. So it's good to know what smart people are doing. And in this case, smart people are buying junk debt. So good news. High yield bonds are leading the stock market higher. Bull market for high yield bonds is also above the blue line. So we still have a little bit of distance to travel, but it's not like outrageous. Notice we only have 3% away from bullish levels. Just a few months ago in October, where I'm hovering, the bullish levels were close to 13% away. You see the difference? That's a huge difference. So the situation indeed has changed in the past few months, and knock on wood, again, we are seeing this this is a good news. I wanted to show an example of a blockbuster trade that was sent to subscribers. Some people took it, and I mean, definitely big congratulations if you took the trade. So we're looking currently at the infamous Bed Bath & Beyond, ticker symbol BBBY. I don't know how much longer it will continue to exist, but back here in August of last year, August 30th, 2022, notice where this downward facing arrow is. This is an actual alert to my subscribers. It was sent out as a short alert. So in other words, you can buy what's called put options. So put options meaning that you're placing a down bearish bet. You're hoping for the security to continue lower. Indeed, this is what happened. I mean, immediately after the day alert was sent, and the next day, on the 31st of August, it gapped. Notice how much it gapped down right there where I'm hovering. And now, currently, it is 88, almost 89% down from where the short alert was issued. It was issued at $12. It is currently at $1.30. All right. So, I mean, if I had a put in this if I had a short position, I would probably just like cash out at this point because we don't know what's going to happen. But I think it's a great idea to take profits. I mean, you this is a huge move. So 10 times. I mean, this could be like, if you bought puts, this could be I don't know, 1,000% possibly. Yeah, that much. If you, let's say you bought leap option, so you bought let's say August 2023 puts. Okay, does that make sense? Okay, if it doesn't make sense, send me a message at MasterCharts Trading. You can send me, you can contact me here. You can also send me a message right here on TradingView.com where I'm hovering. That's TradingView.com. I'm at MasterCharts. So if you got this, if you bought this puts back in August, congratulations. And this is the type of trade sometimes we get at my subscription service. So congratulations. Let's move on. So interest rates is a topic that pretty much everybody worries about. Understandably so, because people, have mortgages, they have interest rates on credit cards. Credit card interests are going through the roof. I mean, some have seen 35% interest rate on credit cards. Mortgages also, of course, are going up. This is, by extension, is cooling demand for housing, which could be a good thing because of the absolutely rampant speculation in housing markets. So if you listen to my videos back in October of last year, I pointed out this, what I thought at the time was an exhaustion gap. I'm going to zoom in on it because it's kind of difficult to see. Right there from October 20th to October 21st, there was a gap down. And so why did I think it was an exhaustion gap? So exhaustion gaps meaning it happens usually after a substantial downward, a substantial move to the upside or the downside. In this case, it was a substantial move to the downside. Also, the nature of this move, especially notice this 19th and then 20th, I mean, it just collapsed. And so this type of moves usually imply what's called an exhaustion gap. So prices on October 20th were at 94 here, and then they gapped down to 92 on 21st of October. So I was like, okay, this is just too weird. It's too perfect. So I mentioned this exhaustion gap to my subscribers and to pretty much everybody on this channel as well. And yes, indeed, it was an exhaustion gap, and by extension, it was the high in interest rates. I will show it to you in a second. But looking at the same security with my indicators on now, so notice that the security moved down to new lows and then kind of slowly but surely moved higher, pulled back towards this yellow support resistance line around December, and now started moving higher again. So I'm fairly certain we are going to continue higher, at least towards this red line, which is about 5% away higher. Now, if we look on the same, or rather, this is TLT, Treasury Bond Fund. This is Treasury bonds. If we do the opposite, we look at Treasury Bond Yield. This is a 30-year Treasury Bond Yield, symbol TYX on TradingView here. We're seeing the opposite. So notice there's that high, there's the gap, in this case up, because bonds and yields move in the opposite direction. Hopefully you understand that. The lower the bonds go, the higher the yield goes, and yield means interest rates. And so indeed interest rates peaked about in October here, and then slowly kind of came down. Notice exactly how they came down towards this blue support resistance line in December of this year, bounced again, but seemed to have found resistance at this level, at the green line. Notice where I'm hovering, around 4%, and now are again continuing lower. So I'm fairly certain we will get to about 3.5% for 30-year yield, and at that point we'll need to see if this level does not hold. So we're looking at about 3.4%, and if it doesn't hold, we will easily continue lower towards like 2.9. And this is despite all the talk about Federal Reserve raising interest rates, etc. So the market is doing its own thing. I would trust the market more than the Federal Reserve. So looking in the future, a good chance interest rates, well, in this case, longer-term interest rates will come down. Some people say that companies such as technology companies depend on lower interest rates for better performance. Well, there you go. If we have a lower interest rates, the stock market could continue higher easily. Right, let's wrap up because it's already getting a long video. So dollar, this is DXY currency, dollar currency index. I'm going to go to weekly charts first, and I'm going to show you briefly weekly charts. So gigantic move for the dollar. We called that move from July here. Several alerts were sent here to buy the dollar, or in other words, let's say if you're trading Forex and you're doing euro versus US dollar, you minor technical difficulties, but here we go again. So the dollar had a gigantic move from July of last year until very recently, until September of this year. I think it topped out here in September and continued lower. This is a weekly chart. So looking at daily charts, again, there's that potential topping pattern in September of this year, and then we came down, had one last bullish signal. So bullish signals occur, or buy signal basically. Buy signals occur when the stock makes a low below this blue support resistance line and then closes above it again. I thought it was a bull trap. So far I was correct. Bull trap again happens when you get a buy signal, but there was no movement to the upside, so you couldn't have made any money here. We are now approaching bearish levels meaning downtrend levels, which is just like very close, maybe like 1% away or so from bearish levels. By extension, gold is taking advantage of this fact and doing the opposite. So gold had a potential, definitely had a triple bottom here. So one on 28th of September, October 22nd, and then again on November 4th. We can also look at it on the weekly chart. There is that triple bottom. 1, 2, 3 on the weekly chart. I mean, it's just so perfect, right? Sometimes you get these perfect patterns, and then it moved higher. Finally, it broke out above this red support resistance line, had several opportunities, or had several potential selling signals or short signals. But again, I was saying maybe this is a bear trap. I don't want to take it. I was correct so far. We're moving higher. We're moving very close to new uptrend levels, meaning that at this point we will start buying gold and gold miners. New bull market for gold is at about 1900. We're super close. Look how close we are. So important, I guess, when you trade in gold, look at the dollar. What's dollar doing? Dollar needs to be moving opposite to gold, and so if dollar is moving lower, gold in this case obviously is taking advantage of it. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up, and sign up for one of the products. Now, I'm considering offering a money back guarantee for for my services here. I haven't yet made a offer yet, but if you sign up now, I think I will offer that money back guarantee. I don't know, let's say, 3 months. 3 months money back guarantee. So, but this money back guarantee, you will need to do a little bit of work, meaning that you will need to record your transactions. So let's say you buy or sell something, you will put it in an Excel spreadsheet, and then at the end of 3 months, let's say, you come back and say, Alex, I did exactly what you said. I followed the system. Here are my transactions, and yet I still lost money. In that case, I will refund your money. Okay. Now, if you didn't record your transactions, and there is no way for me to say, well, did you do this thing that I'm asking, right? So if you want to sign up, I don't have it yet in writing here. You have a free trial for 7 days, but I think I'm considering offering a money back guarantee. So if you didn't make any money, I will refund your money for those 3 months or whatever. So sign up. I have just the indicators. So just the indicators, these lines on the chart. If you want to trade on your own, I think you should have indicators for yourself. Newsletters. This is what I send out on daily basis, and on weekly basis you also get a members-only newsletter, members-only video. So in this video we'll cover all of these stocks that's coming up, and of course the best deal is to get both indicators and newsletters at $59.95 per month. I think it's a wonderful deal, and hopefully you will make tons of money. Let me know if you have any questions. Thank you for watching. Don't forget to hit the like button. Very important to hit the like button so more people will see this video. Thank you for watching. Have another great trading week. Bye-bye.